morning, and let's tell you about the top 5 stocks to watch out for in trade today. Well, it is a focus primarily on the large caps, so let's begin with the big boy within the oil and gas space, and that's Reliance Industries. Well, the company plans to retain control 49.14% of their O2C business, saying that there will be no dilutions of earnings post this carve out. In fact, Reliance Industries will have management control post the carve out, and the independent growth company will look for opportunities across the value chain. This, according to them, facilitates value creation via strategic partnerships, and O2C will have an FY21 estimated revenue of $67 billion, an estimated EBITDA of $13 billion, 1.4 MMBPD of refining capacity, and 38.4 MMT of petcoke capacity, and the largest petcoke gasifier globally, as well as the fourth largest PTA globally. So that's the plan for RIL. Tata Motors, another large cap, and in their analyst meet takeaways, they said that the management has reiterated the guidance of better profitability FCF generation. They have reiterated their target of near zero debt by FY24. For the CV business, they plan to maintain leadership, improve structural margins, saying that the turnaround will be driven by demand revival as well as better pricing and cost reduction. The PV business guided for a PV EBITDA margin in the high single digits over the next 3 years. FCF will be break even in FY23 and positive thereafter. Meantime, watch out for Hindalco. The company is expected to generate $1 billion to $1.2 billion in cash flow per year. They also said that their total spend in India is aimed at $1.1 billion, and they also laid out a lot of plans in their company meet. CLSA has a buy rating on Hindalco with a target price of 380, saying that Hindalco has highlighted their detailed capital allocation plans. They also look to pay 8 to 10% of the FCF pre-growth Capex as dividend, and they have addressed investor concerns about their use of cash. CLSA says they await further clarity on the profitability of these projects. Watch out for Bharat Forge, as the company is in a pact with Paramount Group. This is for protected vehicles in India, and this joint venture aims to make armored vehicles in the country. And finally, keep an eye out on Mphasis, as private equity major Carlyle has tapped a clutch of banks and one pension fund to finance their bid to acquire the Blackstone-owned Mphasis, as they have emerged as a probable frontrunner to buy out the Indian IT services company, and that could be one of the largest buyouts. This is according to reports. And as of now, they're negotiating with Deutsche Bank, Barclays, Stanchart, CPPIB, as well as Nomura for the buyout financing. And a lot of other suitors as well could potentially team up for this investment for Mphasis. So watch out for these stocks and trade.